Hi, all. It's Catherine Burgess with Burgess Group Compass. We're going to do a quick overview of real estate headlines locally and nationally, and then we're going to get more in depth about everything. So locally, we had our market behave very typically last week. The notable thing is that we are ending the year over 600 units, under contract units, higher than what we saw in 2018. And nationally, rents have gone up 7% month over month and with a 21% year over year. That is huge. So getting more in depth on all of that. Last week, we had a typical number of new listings come to market, slightly lower than normal amount of under contracts. What that did was result in a slightly larger amount of inventory for us. So we will take it. We want that. Last week we had 0.63 months supply of inventory, where in 2018 we had 0.47, in 2019 we had 0.38, and in 2020 we have 0.41 months supply of inventory. So just a smidge higher. Then those year-to-date under contracts, we care about those because they are coincident indicators, indicating exactly what is happening with buyer demand. So we are really astounded to see that we'll end the year around 614 under contracts higher than in 2018, around 424 under contracts higher than in 2019, and around 137 under contracts higher than in 2020. So all of those indicate that huge amount of buyer power and buyer demand that is pushing our market forward. So will we start to see a lessening of the amount of buyer demand? There's certainly a lot of people who are saying that the national migration is on the downside. Interest rates are expected to go up in 2022. So there's speculation that there will be a waning of that buyer demand. From a price band perspective, in the last 5-6 weeks, we saw luxury buyers cleaning up. They were going to town and going under contract at an extremely high rate. So this past week, in contrast, we saw luxury buyers going under contract less frequently than luxury properties coming to market. Then by contrast, in the 2 million and below price ranges, in every single price band, we saw more buyer activity than we saw new listings come to market. Nationally, we have seen this 7% month over month and 21% year over year increase in rental rates, which is astonishing. So why is that happening? It's such a good question. And there have been more people leaving the nest post-COVID than we had seen before. So that time being at home and with the money paid out by the government and so on made it so that a lot of people could leave the nest. And so there's increased number of buyers. Then additionally, there has been so much price appreciation in the housing market that some buyers have said, you know what, I'm having a hard time getting in. I'm gonna wait it out and go to the rental market. So the long and the short of it is there are more renters than there are homes to rent. So we are seeing prices go up. Now, one of the really cool things about the housing market is that if you are able to get into the housing market, you can arrest your housing cost, which is typically your biggest monthly expenditure. So if someone buys with cash, or if someone gets a loan that has some sort of a fixed rate on it, then you freeze that cost while all of your other costs are escalating in an inflationary market scenario. So there's a compelling reason to do that. It really conserves your assets to have that housing cost fixed. So really, even at the lower end of the market, we can help you get under contract. And our team has an incredibly successful rate of getting people under contract, even in those lower price points. David, our teammate, he actually got someone under contract this past week in that low 300 rate or price range with 8 other offers. And so it can be done. And call us with questions. We're happy to help. And then sellers, what to keep in mind is that what we're seeing with all this buyer demand is not enough inventory. So what we don't know is, are we going to see a little bit more of a typical historic peak in the market where the spring season is super robust and then we see a quiet in May, June, July, August, and then a secondary little market in the fall? Or will we see that enormous sustained demand throughout the whole year? We don't know. So that is something, it definitely would make sense to bank on a lot of pent-up buyer demand in January, February, March, April. Beyond that, it's hard to know. So call us with questions. We're happy to be a resource. Happy 2022. We will see you in 2 weeks, and please like, subscribe, and share. Thanks.